Today we are joined by Josh Best, the Chief Investment Officer of KISS Capital. Josh, as one of the founders of KISS Capital, can you tell us a little bit about the company, your background and that of the investment team?
So we started KISS Capital in early 2009 and launched our first fund in October 2009. We had 4 partners to start. I'm one of those partners, and we come from a broad background within the banking and broking sectors. My background was in hedge fund sales for about 4 years prior to joining KISS Capital. During that time, Mike Surridge was one of my clients. So Mike is our CEO and head of risk management. He was running proprietary trading at BNP in Hong Kong, and that's where we formed a relationship.
Your company is founded on the principles of liquidity, transparency and risk management. What does that actually mean for investors?
I think it was important, particularly in 2009, given we'd just gone through a global financial crisis, to really zero in on what would be important within alternative managers in the future. So transparency obviously was going to be key. That whole black box of the past was being thrown away. Given our strategy, we're very open with our investors. Happy to go down to position level, and we think that's important for the relationship between us and our investors to be more solid over time. In terms of liquidity, there was, again, learning from the crisis, matching your liquidity of your investments to the liquidity of your fund and your investor terms was paramount. So we've decided, given our monthly liquidity of the fund, that all our investments must be very liquid, all tradable on exchange, and limiting the amount of illiquidity in the portfolio to a very small amount so we can match investor terms. And then finally, risk management. Very key for us, and having Mike as one of the partners that's solely focused on risk management, we think has helped the performance of the fund over the last 6.5 years. And we do that through a number of different ways that we'll discuss.
I would now like to spend some time on the research process of KISS Capital, with a particular reference to the KISS Capital Asian Long Short Fund. What are the investment objectives of the fund?
So very simple objectives. We set out to achieve 15% per annum net to investors after fees, with a very low volatility and low correlation to equities and other asset classes.
Your strategy focuses on absolute returns. Can you describe your typical net equity invested ranges and how and why they change?
We're close to being a market neutral fund, even though the fund's called a long short fund. So our net exposure is somewhere between plus or minus 20% net exposure to the market. That's actually very tight. They will change very slightly over time. If we're finding more shorts than we are longs, we might have a very slight net short bias. If we're finding more longs than we are shorts, we'll have a small long bias. What we try and do is not pick market direction. Keep the fund relatively market neutral and let the stock picking generate the alpha for us.
You have an active trading style and focus on short-term opportunities. Can you explain the investment process behind your strategy?
So what we're looking for is catalysts. That can be anything from an earnings report to a management change or a regulation change. We spend time looking for relatively near catalysts. That could be anywhere up to 3, potentially 6 months. What that does by focusing around that catalyst is reduce our exposure to the broader market moves. We typically have smaller size positions, but about 60 positions in the portfolio. And ultimately, over time, we really only need to get about 60% of those right to produce a consistent return, which we've shown over the last 6.5 years.
In terms of process, how do you find opportunities across the Asian region?
So the portfolio managers spend much of their time really looking for new ideas. That can happen from company meetings, speaking to industry contacts, getting out to find out. So we get into Asia and we travel and meet people, and also sweating the relationships we have on the sell side. The reason why we have the geographical focus we do is, particularly Australia, the fortunes are very much linked to what's going on in the north. So by looking for ideas in China, in Hong Kong, in Asia, there is cross-pollination of things that are going to affect Australia, and also vice versa.
You have a strong focus on risk management. Can you explain what tools you use to reduce market risk?
So I think for alternative managers, we have three ways to either dial up or dial down the risk. One's through diversification or concentration. Our portfolio is a diversified portfolio. The other one is gross or low leverage. We actually use low leverage. Over the life of the fund, it's broadly been around maximum invested, so no leverage used. And finally, a high or low net exposure. And as discussed, our net exposure is quite low. So we've gone on the conservative side of each of those three buckets. In terms of what tools we use to achieve that, we do use some futures to bring back our market exposure, particularly when we're finding more long positions than we are short positions, and some very simple option strategies around single name stocks when we have identified a particular date and the payoffs make sense.
Your fund focuses on absolute returns. Can you explain why your strategy uses short selling?
So I think short selling is becoming more and more important to investors as a tool to generate returns. As technology change speeds up and industries get disrupted at a much faster pace, quite often investors don't have exposure or can't get exposure to the disruptors. It's very easy to see who is going to be disrupted and the incumbents that it's going to affect. Through the markets, we can get exposure to those themes through using short selling.
How do you manage currency within the portfolio?
So we hedge down any profit or loss in each country every month. So an investor in our fund will only end up with returns of the investments we make in individual stocks and no currency fluctuations.
What sort of investor does the fund suit?
So given the low volatility and the low drawdowns that the funds experience, but a relatively high return, we're actually focused on investors that have got too much money in the bank earning 2% interest rates. They know that that's the wrong thing to do, but they don't want to take equity market exposure. So we can offer low volatility and a high return.
How can the strategy fit into an overall portfolio?
So because we have a zero correlation not only to equities but all other asset classes, really it can be a core position in any portfolio.